Hey everyone, welcome back to another video on the channel. Today's video is going to be on cleaning up my portfolio and also de-risking my portfolio. So let's get into it. Alright guys, so as you can see, the portfolio is at $7,750 exactly somehow. It literally just changed. I'm filming this on Monday, so the market is kind of still open. It's after hours. We had another green day today. As you can see, we're just still doing really good. But yeah, I just want to get into like how I'm cleaning up my portfolio. You can see we have far less positions, greater position sizing, and things like that. And I just want to talk about that and kind of document it in this video here for you guys. Alright, so to start off, you guys can see I only have major positions now. As you might have seen in the past few portfolio updates, I had been dollar cost averaging into all kinds of stuff, and I had, a ton of positions, some with, quarters and eighths of a share, and that is because I had been dollar cost averaging into these two sets of stocks here, the ones that I'm essentially selling puts and calls on. So I ended up just dollar cost averaging a few dollars every single day into these dividend wheel stocks that I was selling puts on, and then I was also buying $2 every single Monday of these unprofitable stocks that I've been wheeling as well. And I've been doing that for a couple weeks, and I decided over the weekend I wanted to get rid of all those random shares and just kind of clean up the portfolio and just make it much more organized. So I did that. I also removed all of my reoccurring investments that I had on the portfolio, just so that I could kind of manage how much money was being spent on ETFs and stocks, rather than just kind of throwing cash out there every single day. So I kind of just cleaned it up in that regard. As you guys can see, I also bought $200 worth of each of the top 4 yield max funds that I like the best. So you can see I have $200 in AMZ, which is an Amazon covered call ETF that pretty much does a similar strategy to what I do, but it does it automatically through an ETF. So I'm essentially getting paid a dividend yield for these people who are running this fund to sell call options for me. So it's as if I'm holding Amazon shares and selling calls myself. So I thought I may as well add this to the portfolio to have some passive gains every single month, because it is a monthly pair. And that goes the same for NVDY, Aptly, as well as GOOY. These are all four by the same company. They do these yield max funds, and they basically pay out monthly dividends from selling covered calls. So I have that in Amazon, Nvidia, Apple, and Google. So I bought $200 of those 4 yield max funds, which I'm going to be holding and essentially dripping the dividends. These are more of an experiment. I'm not sure how safe these are. They have incredibly high yields. Some, I think the lowest in here is Aptly, which has 30%. And these yields go all the way up to, I think NVDY probably has a 50+% dividend yield. So yes, it is kind of insane, and so I'm not super sure about these, so I just allocated $200 to each of these 4 funds. They do have more funds, like they have one on Tesla, they have one on ARK, Innovation ETF, but I'm not as comfortable with that risk, so I basically put it on the 4 yield max fund companies that I thought had the best long-term growth in my mind and safety. So yeah, on top of getting paid monthly dividends from these 4 here, you can see I'm starting to build up a position in SSO. SSO is a 2x leverage S&P 500 fund. So my plan is to essentially dollar cost average about a share every single trading day into this fund until it makes up about half of my portfolio, at which point it'll basically give me the leverage as if my entire portfolio was just the S&P 500. So the benefit of this to me is that by having half of my portfolio in this fund, I'll basically have identical growth and loss to the S&P 500. So because as you guys can see, my account is doing very well. Obviously, I've been trading since about May 31st, which was my 18th birthday. As soon as I immediately opened an account here. But you can see we're up 3.3% since May 31st. If we go to something like SPY, which is the S&P 500, and we go to the 3-month chart, since May 31st, they are up about 9.5%. So I'm losing to SPY. Of course, I'm totally happy with making $250 from just selling options, and I totally plan to continue to sell options. Don't get me wrong. I'm still doing all of the weekly put selling, all of the call selling, so none of that's going away. All I'm looking to do is essentially build a position in the S&P so that over time I can get some of that S&P growth that I'm missing out on here. So yeah, building up a position in the S&P over time, dollar cost averaging, so I don't get a bad entry. I'll get a pretty good cost basis if I keep doing this over the course of, it'll probably be around So if I'm buying 1 share a day, I'm probably going to get up to about 60 shares, and so it'll probably be over the course of 3 to 5 months that I'll be buying this before it gets to that 50% mark. So we've got a ton of time to dollar cost average into this. While all of these yield max funds are paying out, we've got Key and T, which are still going to continue to pay dividends. I think they both pay out. I think T pays out this month actually, and Key pays out next month. So we'll be receiving dividends from these two, high dividend yields from these four, as well as call premium from Key and T, while also doing weekly to monthly puts, just selling them every single week and getting a ton of premium. So we're bringing a ton of income into the account, while at the same time we will eventually have similar growth to the S&P. So this is kind of the direction I'm moving in. I'm sort of trying to de-risk and move towards the S&P more while still doing what I enjoy, which is selling puts, selling calls, and buying dividend stocks. So we should be having a ton of income, as well as mimicking to a degree the growth of the S&P over time. So yeah, that's essentially how I'm de-risking. I'm just continuing to sell puts to just bring more cash into the account. I'm de-risking by reducing my holdings to ones that I believe in more than just having a ton of random things. And on top of that, I'm building a position in the S&P to hopefully also reduce risk. And yeah, one last thing I'm doing to reduce risk is I'm selling far out call options. You guys can see I have a Key $12 call, which you guys have known about. It's been in here for a while, expiring all the way in 2024. And a lot of people would say, you know, that's ridiculous. Why would you want to wait, what is it, maybe 6 months for $160? Well, actually, so waiting 6 months for $160 is a lot more than my 2% per month goal when it comes to options premium. Not to mention I'll be getting the dividend while also hedging my downside and lowering my cost basis on Key. And so I employed the same thing with T. So we are now covered on T for it to drop essentially 38 cents on the share price without me taking a loss. So we basically locked up these shares of T to get paid a premium over time, as well as to continue to receive dividends. So this is kind of my new strategy for covered calls, is I'm just going to sell far dated, above or at my cost basis calls and collect dividends while we wait for that to decay. As you guys can also see, I'm moving towards selling strictly weeklies. As you can see, pretty much every single one of these that I opened this morning, today's Monday, are all weeklies that expired this very Friday, except for the single Labu put, which expires next Friday. And speaking of the percentage goal, I had someone, in fact, let me bring that up real quick. So we had Parker Weiss 8795 here. Say, great video. Thank you, Parker. Quick question though, is there a certain percentage of premium you aim for based on how much collateral you put in? And I responded with yes, 0.5% per week till expiry. And that was my goal before, but as I said, I'm trying to de-risk the portfolio a little bit. So instead of shooting for 2% a month in premium, I'm going to be shooting for 1.5%. And the reason for that is because I take on less risk. Even though I'm collecting less premium, I'm taking on less risk, and it allows me to have more cash that I can put towards the S&P. And yeah, so I'm lowering that percentage goal by just 0.5% a month, which might end up getting made up for in yield max funds anyways. So we might still be hitting that 2%. We'll have to see after a couple months where we're at. But yeah, I'm kind of lowering that just because I want to de-risk a little bit, because as you guys may know, the market has been doing literally nothing but going up for like, geez, I mean, since March. It's been months of it just constantly going up. And while that's not necessarily a reason for it to go down, it is a reason to maybe step back and say, hey, this has done nothing but go up. You know, it may be due for a little bit of downtime, you know, or it might not continue to grow at that rate, because it is kind of crazy to see this after all this pain we experienced in 2022. So all I'm saying is I'm going to step back a little bit, lower the percentage goal, build a position in this, as well as continue to build up our dividend yielding positions, and just kind of take a little bit of risk off. And as you guys saw earlier in the video, I also organized a little bit. And yeah, that is kind of just what today's video has been about, is just reorganizing the portfolio, de-risking a little bit as we continue to climb, because as you guys can see, I'm up another $30 today, which for my all-time makes it $250, which is just insane. That is just a ton of profit, all from options premiums and dividends. Of course, a little bit of capital growth on Key, but aside from that, yeah, that was today's video. By the way, guys, I'm hoping to be getting at least 2 videos out every single week going forward, so look forward to that. Still going to do the weekly portfolio update every single Saturday regardless, but I'm also going to try and get in a second, possibly even a third video for this week. I'm looking to post a third video later this week, so keep an eye out for that. And also, if you are watching right now and you are not subscribed, as you can see, 82.6% of you who are listening to this video right now, who can hear me talking directly to you, yes, you. If you are not subscribed, 82% of you, please consider subscribing, guys. I'm doing weekly stock market videos on options, on dividends, on stocks, on literally everything, and I'm going to continue to increase my volume of videos every single week, from tutorials to whatever you guys want to see, so please consider subscribing. Alright, but aside from that, guys, that was today's special little video, just a quick little update on what I'm doing in the portfolio. Look forward to a second video later this week before Saturday. That'll be exciting. I got a couple plans for that, and then also look for this week's portfolio update video coming out this Saturday. I hope to see you guys there, and yeah, thank you for watching.